Okay, guys, I'm about to teach you guys a tool, a very powerful tool that can be used to take trades based on the high and low of the Asian session. It's called Turtle Soup. It's an ICT concept that is massively overcomplicated by a lot of people on YouTube and other social media educators. Um, now I've discovered Turtle Soup quite recently, and I didn't plan on making a video on it. I planned on keeping it exclusively for the people um, in my one-to-one mentorship and course. But you know what? Why not? Um, I would have appreciated if this video was around when I first started trading. A bit of background: I'm a profitable day trader. Been doing it for a few years now. I was unprofitable for almost 3 years. Before finally finding a set of strategies that worked for me. I do not care for massive risk reward ratios. I'm very risk averse. I go in, I make 1 to 2 risk reward, and I leave the trade. And that's just my style. 1 to 3, 1 to 4 tops. Very risk averse. I like a good win rate as opposed to focusing on massive risk reward trades. Um, and yeah, I go into the markets, I make 3 to 8K a month, and I leave, and that's it. I don't like going too crazy. I don't like promising people they'll be a millionaire or a billionaire because it's unrealistic. Um, Play the game, make your money, win a trade, and leave. And that's my philosophy. So this is Asian session. This is the Asian session high. This is the Asian session low. This is 8 p.m. New York time. This is 2 a.m. New York time. I know it should be midnight New York time, but for Turtle Soup, we'll be using 2 a.m. New York time. This is Asian session. Essentially, how Turtle Soup works is if the high is swept first, we then wait for the low to be swept as well before finding long trades. So if high is swept first, we wait for low to be swept as well before looking for buys, right? We then look for buys, right? I hope that's clear. Now, vice versa is also applicable. If the low is swept first, we wait for the high to be swept as well before then looking for sells. We then look for sells. That is the gist of it. Now your exact entry model after the low and high or the high and low are swept can vary. You could then enter off a retracement into a fair value gap. You can enter off of convincing market structure in a particular direction. So if I see a lot of consecutive lower lows, so convincing bearish movement or convincing lower highs, then I could also take a trade based off of that. I could enter a trade based off retracement into an order block. I've got a whole bunch of setups on this channel that you could use in conjunction with Turtle Soup. Um, but the gist of Turtle Soup is we wait for the low to be swept, and then we're going to sweep the high, and then we're going to look for sells, or we wait for the high to be swept, then we sweep the low as well before looking for buys. Now, my adaptation of Turtle Soup is I actually just like to wait for the low or the high to be swept first before targeting a trade in the opposite direction. And I know this isn't how ICT teaches it, but I found that this is very profitable and it works. When I backtest it, it works. And that is what is most important. So the way I use Turtle Soup is, let's say this is my Asian session low. So this is Asian session low. This right here is my Asian session high. Let's see if I could try record this video in less than 10 minutes. So Asian session low, Asian session high. I will wait for the low to be taken, and then I will immediately start looking for buyers targeting the high. So when I'm here, I will start looking, I will start analyzing, I'll start mapping out any interesting fair value gaps, any interesting order blocks within my region, and start looking for an entry to target the high, and vice versa. Or if I see something like this, so if I see that the low is swept and then price does something like this, where it starts forming a series of consecutive higher highs, I could also enter straight off of that. So if I see convincing motion towards the opposite liquidity level for Asian session, I would also take a trade based off of that. And I hope that makes sense. So I just explained the traditional turtle soup methodology. I explained my adaptation of it. I'll now show you a few examples, and that'll be it for this video. This is really, really, really powerful. And it is so powerful that I plan on reserving it exclusively for people inside the Ebro trading community, where I essentially hold my students' hands from complete beginner or unprofitable to becoming profitable, daily trade breakdowns, complete set of videos on, all concepts from zero to how to become profitable. My exact trading strategies are in there. I don't know if there's any spaces open at the moment, but if there is, it'll be in the description. Um, and yeah, let's get back to these examples. So let me clear everything. Remove all drawings. The indicator that I'm using is this one right here. So feel free to copy my settings. It's called Asian session range. Um, I haven't done much to it. Feel free. I deleted labels and lines over here, but feel free to use it. Now, I got a few examples of how I use Turtle Soup. So let's just get straight into that. So 29th of July, Monday the 29th of July. I've got my Asian session marked out here. It's this area shade in blue. Here is my low. Here is my high. Right? Now, what's happened? What has price done? So we can see that price takes out the low. We then have a series of, we've got a high. We've got a higher high. But then price comes back down. So we haven't formed three consecutive higher highs. So you can see we do this. So we've got high, low, higher high, but then we form a lower low. So this is not a break of structure that I would use. I wait for a convincing break of structure. So I see, for example, here, I form a high. I've got a higher low, a higher high, a higher low. I now enter the trade. So this is exactly where I entered the trade. I enter long here. I go, I mean, you have to always provide sufficient margin in your stop loss for slippage. So I'd put my stop loss somewhere over here, and I'd always target 1 to 2 risk reward. So 1 to 2 very conservative, and that is your dub. That is your win. So I don't target 1 to 10 risk reward. Like a lot of these traders on YouTube. I remember when I first started learning to trade, the reason I was unprofitable for almost 2 years was because I listened to these bullshit YouTubers who told me target 1 to 7 RR, 1 to 8 RR. This is how I made a 1 to 10 risk reward. It's all lies. That shit does not work. Trust me, I've been there, I've done it. Stay conservative, focus on having a high win rate, and I promise you, you can consistently make a very respectable income from the markets. The markets reward those who are modest, those who are not greedy. So, first example of my adaptation of turtle soup. Let's head over to my second example. So 31st of July, I've got my low here. I've got my high here. So this is my Asian session high, by the way. So my high was made here. What am I waiting for? I'm waiting for the high or the low to get swept before taking a trade, aiming for the opposite liquidity. So what happens here? We sweep the high almost immediately. Now, what am I waiting for? I am waiting for a confluence that would allow me to go short. I am now targeting, if I can find, yeah, so I am now targeting this region. I'm targeting this liquidity over here, right? So how am I doing that? Or actually, a better tool to show what I'm targeting is I am now targeting this. So this is what I'm targeting. So now I'm monitoring. Can I see a fair value gap somewhere here? Yes, I can see a fair value gap here. However, the fair value gap is broken. Can I see consecutive lows being formed? Yes, I can. So here there's a whole bunch of ranging motion, so I would not enter the trade yet. But then I see, okay, I form a high, I form a lower high. There's a low here, there's a lower low here. So we can see that we've got the price does this. So I don't have my break of structure yet, but then I have my low, I have my lower high, I have my lower low. I immediately would enter the trade based off of that. So, or do I have? Let me see, let me check. We've got a high and we've got a lower high. We are now waiting for a second lower high. Do I have a second lower high? Not yet. So I'm waiting for 2 consecutive lower highs. So I sit on my hands. I don't take the trade yet. I've then got another high. So I've got a high, low, higher high, higher low, higher high, higher low, because we're looking at candle closure. So I'm still not taking my trade. I'm still not taking my trade. I'm waiting for 2 consecutive highs or convincing motion to the downside. Okay, so if you can see here, if I take a moment, I've got a high, I've got a lower high, and then a low, and I've got a higher low. So I can't yet take the trade. Can I take the trade yet? Okay. High, okay, and then we break of structures down. Okay, so our break of structure is over here. So we can see that here we've got this low, we've broken beneath this low. I can now go short. Around here, I'm going short. Putting my stop loss over here somewhere. And I'm targeting 1 to 2 risk reward ratio. And that's it. And that's a winner for me. Now, the beauty and the elegance and the execution in this setup is in timing your entry. If the market is ranging like we saw over here in all of this region, I don't enter the trade. If I don't see convincing motion to the downside to target a bearish trade, I don't enter. You can see that there's a lot of ranging over here. Because let's say we entered the trade prematurely over here. Let's say we see this high, we see this high. Okay, let's say we enter over here. Now, your stop loss, you're going to get stopped out before the trade goes back in your direction. I hope that makes sense. So even though your analysis was correct and the market was indeed going to trend bearish and you were indeed going to hit your stop loss, your take profit in the long run, you get stopped out but before you have the chance to take any profits. So you wait. You have patience until I see convincing movement to the downside. And I know a lot of people tell you, oh, here's the exact confluence or here's the exact pattern to look for to enter. No, it's false. I promise you, it's all lies. You will only get a feel for how to get your perfect entry through backtesting. I've been backtesting for, I don't know, 3 or 4 years now. I've spent thousands of hours staring at the charts backtesting. I've lost so much money before I was able to start making money. And I know it's not stressed enough by these people online, but I was a victim of that. I was a victim of, here's the perfect setup, here's the perfect entry, here's the perfect pattern to look for to enter. It's all BS. So you have to wait. You have to sit on your hands until you are convinced, based on your backtesting, that, okay, price now looks like it's going to trend bearish. And you get that through experience. Break of structures can help. Fair value gaps, order blocks, retracement, it can all help, but backtesting is key. Let's go to the final example. And I apologize for going on a rant. It's just I can't stress it enough. Because I've even worked with some students in the past whereby, they say, oh, but ICT says this or this YouTuber says that. We have to wait for this pattern. No, it's false. There is no, this is a game of probabilities, of confidence levels. You feel me? So, 7th of August, we've got our low, Asian session low, and we've got our Asian session high. So, Asian session low and Asian session high. So what is swept first? We are waiting for the high or the low to be swept first before targeting a trade in the opposite direction. Okay, we can see that the low is swept. I am now waiting for convincing motion to the upside. So we can see we've got a high, we've got a higher high, another higher. We've got 3 consecutive highs. As soon as I see the second high, so when I see this higher low, I'm immediately entering the trade. And I mean, just to make it clearer, we've got high, higher low, higher high, higher low. So that to me is a break of structure to the upside from, our previous bearish motion. And I am immediately going long over here, targeting 1 to 2 risk reward ratio with my stop loss in line with this fair value gap over here. So I'm targeting 1 to 2 and that is my trade. Sometimes I'll close like 30% of my position at 1 50% at 2, and then I let it run. In this case, I would have let like 20% of my trade run, and that's where you can really make some big profits, because you can see that the earning potential of this trade was like, you could have gone all the way up to 1 to something like 1 to 9. But I'm not going to be that, that guy that lies to you and says, oh, from the start I was targeting 1 to 1 to 15 risk reward, because that's unrealistic and that would be a lie. I hope you've learned something from this video. Please like, comment, subscribe. I genuinely read all the comments and answer every single question on every single one of my videos. I don't know if there's anyone else that does that, but I read and answer every single question. I am providing you guys with content from my paid mentorship, from my paid course for free. I provide everything. All my knowledge I provide for free. So I would appreciate it if you could take the time to click the subscribe button. We're almost at 1,000 subs, which to me is crazy, because my initial goal for this channel was to hit 100 subscribers. So 1,000 for me is crazy. I'm very grateful for you guys. I appreciate you guys. If only one person learned something from this video, then making this video was worthwhile for me. I'm also making a Instagram account for Ebro Trades, so feel free to follow me there and DM me if you have any like one-to-one questions, and I will help you guys. I will help everyone, because I didn't get this help when I started, and I could have saved myself 2 or 3 years of losing money if there was someone out there who genuinely just helped me out. So yeah, peace. Let me stop my rant. Take care, boys. Hope you enjoyed. Peace.